Well, I guess we're going to go both. Well, I can't even talk today. We're going to both go on together there. So, hello, everybody. This is the Texas Real Estate and Finance Podcast, and I am your host, Mike Mills, with Mike Mills Mortgage and Finance. And today, I don't have a bunch of teases and special hooks and whatever put into play because I brought in a good friend of mine today. We're just going to get right after it. This is Jen Gauido. Hello, everybody. Say hello, Jen.
Hello.
Get your clapping and cheering going on. Thanks. So Jen is a repeat offender. She's been on my show multiple times now because she's a good friend of mine. And anytime I need someone to come help me talk about mortgages, because we talk a lot about real estate. I talk a lot of things to help agents, and I talk a lot about investing and things of that nature. I'm even doing, have you seen my little series that I started with my daughter about child finance? She's really fired up about it, by the way.
I think that's super cool. I'm going to make Lily watch.
Let me just tell you how excited she is about that. Let's just say there's car rides that involved us screaming at each other on the way. We went to the bank yesterday to open a checking account, and I made her take some pictures and do a little video recording, and she was real thrilled about that. So if you haven't,
that's awesome though.
Yes, no, it's great. But see, I'm not even proclaiming to be an expert on this. I'm just presenting hey, this is me and my 16-year-old daughter's journey for the first time, me telling someone in my house. It's one thing for me to tell you how you should do your finances and check. I mean, I have a little bit of experience in this, but it's a whole other thing for me to tell my daughter, who thinks that I'm a moron 90% of the time, and isn't going to listen to anything that I say. So
I think it's awesome though, because they don't really teach us stuff in school.
No, not at all.
I mean, they have like a dollars and cents class, which is what Lily is in right now.
That's a joke.
But they don't teach you.
No, they don't teach you anything.
No.
And you know what? I think there is a one size fits all to some extent when it comes to personal finance, but there's little nuances to it. And depending on what your parents taught you, because that's the shame of it, is as much as what somebody else taught you or what you chose to go find out on your own. And I grew up in a house, and I think you are the same, that there was little to no financial education at all. I didn't get it at school, and I didn't get it at home. It was just, and as a matter of fact, it was kind of the opposite. It was like, you don't get to ask, and we're not going to tell you. Mm-hmm. So don't even buy. If I even ask, like, how much money do you make, Mom? Oh my God. Like, you want to talk about shut the blah, 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 every explicit out there. It's none of your GD business. It's like, oh, okay.
Yep.
So, I mean, was that your house too?
Yeah. My grandmother we didn't talk about any of that stuff.
You don't talk about it. And that's just, I mean, it's not right or wrong. Like, I don't even blame my parents for it because they weren't told, and there wasn't like anything in the public zeitgeist that was like, hey, you need to kind of explain how your kids, how money works. Like credit cards, for example, and the boomer generation didn't understand credit cards. I still think many of them don't. But they certainly didn't pass down that information to their kids of, hey, you're buying that pair of shoes for $100, but you're actually paying $125 the first month that you have them because the credit card interest is 20%. Right. And they're not, that information is not being passed on to kids. So I don't even blame the parents because they didn't know any better either. Yeah. But if you do know better and you are aware, then it's your responsibility to pass that information to your kids.
Yeah. Absolutely. We did that with Alyssa. Yeah. She made her first big girl purchase on a credit card that we added her as an authorized user, and we went through the steps and we sat down and talked about it. But I mean, you're absolutely right. Nobody talks about it.
No, they don't talk about it. They don't tell you what to do.
They want you to get into debt.
Yes.
Lots of debt.
Yes. I'm still trying to figure out who they are, by the way, because I blame they all the time.
Same.
Those theys are a bunch of assholes, and I wish they would stop doing that, but I don't know who they are. I'm still trying to work. I mean, I have an idea, I think, but then you get into conspiracy theories and all kinds of stuff like that. So, all right. So anyway, let's move on to what we're actually here to talk about today. Okay. So again, like I said, we talk a lot of real estate stuff, but we don't get into the weeds on mortgages very often on the podcast. But that's why I always bring you in to do that, because we can do that together. Because I can sit up here by myself for an hour and talk about mortgages and say everything I know, but that's boring. Yeah. So it's much better to have an intelligent person across the way from me. Thank you. That we can,
even though I think you're like one of the smartest people I know.
Sure. You say that all the time. I appreciate that. But we can go through this. So the point of today is, Jen and I are going to kind of explain to you. Now, this is for realtors who are wanting to have a resource to help explain to clients how the process works. So if you have a client that you're working with and they're getting ready to buy a house and they want to know every detail about how this is all going to play out, this would be a good podcast for them to listen to, because I think we're going to go into quite a bit of pieces here, not just the lending side, but just what to expect from buying a house, getting under contract, and all that stuff. And I'm sure when it comes to the agent side, we'll probably, maybe misstate something or make a couple mistakes. So if we do ahead of time, apologize. But also, we're going to talk about, pull the curtain back a little bit on the mortgage side of things, kind of what you can expect when you're getting a mortgage. So as realtors, when you talk to your clients, you can tell them, hey, when you're going through this process, this is what you can expect to happen. And the importance about understanding what to expect to happen is that when things don't go the way they should raise some red flags for you. And the problem that I think a lot of people have right now as home buyers is either you've never done it before because you're a first time, this is something you've never gone through, or B, you have done it before, but it was 10 years ago.
And things have massively changed.
And so you only don't know what you don't know. So turning it back to the whole thing about, personal finance with your kids, it's like, how can you blame somebody for something that they don't know? So what we're going to do is kind of, like I said, pull back the curtain a little bit, show you how it works on the lending side of things, and go through some few scenarios, tell you what to watch out for, where you can have some pitfalls and all that kind of stuff. So let's just go ahead and get right into it. So first, let's start off, Jen. If you were Susie home buyer and you were going out there today to start looking for a house, what would you do? Where would you go?
Well, I think majority of most buyers, me included,
yes,
I will sit on my couch and just see what's currently on the market.
Yes.
And honestly, I want to say what's really picked up quite a bit. I mean, realtor.com is a huge one, right? That people just sit on. It's user friendly and people just sit there and scroll through it. But then you also see them on your Facebook feed now.
Yes.
Like properties are just popping up constantly on your Facebook feed. So I think that's where the peak of the interest kind of starts, whether it's on their Facebook feed or if you're just like me and you just kind of want to constantly see what the houses that are on the market and
like in your neighborhood or around what they're selling,
or if there's cool houses like new floor plans or stuff like that. But that's kind of where I would start. But like me personally, I don't really ever go onto Zillow. Just because I just don't really find it very user friendly, pretty.
So I use Zillow a lot when I look at properties.
Well, I mean, you're also older than me. Like, I feel not that you're that much older, but
really taking shots here, man.
But I just kind of feel like realtor.com, like from a user perspective, I just find it very easy to go through. I can go out, I can go in, and it doesn't lock up on me. The pictures are easier to look through. I just find it much easier.
Have you used, so we got realtor.com, you've got Redfin. Do you ever use a Redfin? Okay. I think a lot of people, I was at something today and they were talking about the statistics for Redfin, that they've either been flat or down for users, which, I mean, I think a lot of the sites are down for users because, there's not a lot of people searching for homes right now, for the rate reason or whatever. But that's down a little bit. Zillow's obviously a big player, realtor.com. And then another one that's come up. Have you heard of homes.com?
No.
Okay. So homes.com has a very interesting little thing that they're doing right now. So this is another thing that we talked about today. We're not going to get into all the lawsuits that are occurring with real estate agents and commissions and all that stuff, but this does relate to some extent, because homes.com has put a big marketing blitz out ever since all this stuff happened. And now realtors realtors out there hearing this, they can chime in on this, but they're getting stuff in the mail constantly from homes.com. I'm actually, so my wife's a realtor and I signed her up for homes.com.
She was my first.
Yes, she was.
She'll always be
always your first.
Yeah.
But
I was her first.
Oh, that's right. Yes. You'll reach others first.
I know. I know.
That's so wonderful. But I signed her up for it just to see what they offer. And I'm actually, in my market update that I published on Tuesday, I'm going to break down kind of what they offer, what they do. But, just as a little bit of a precursor, essentially right now, and I say right now, there is no cost to sign up for homes.com as a realtor. Okay. Oh. So if you want to put your listing on homes.com, you can. I don't believe that they have relationships with the MLSs because I believe their whole business model is to not have relationships with the MLSs because all this lawsuit stuff, the MLSs are having some issues and they're trying to create a national one. At least it seems that way. And so as a listing agent, if you put your listing on there, then anybody that clicks on your listing to look at it is your lead.
Oh,
so
wow.
They are not like Zillow. Zillow's entire business model is built on realtors paying for leads through, and obviously that's suffering a little bit right now. But so that's their whole, well, homes.com does not do that, nor do they charge right now to be on their site. Now, I think it's just like anything else. It's like, Facebook didn't charge forever for you to be a member, but then they take your ad space and, all that kind of stuff. So nothing's ever free. Let's be honest and clear about that. But so that's another site that people are going to start looking at homes is homes.com. And they've picked up the greatest. I think they're second behind Zillow right now as far as like traffic is going through their site. So that's a way you can look for homes. Now the next step would be, okay, I found a house that I kind of like, right?
Okay.
So Jen, what do you do next as a buyer? Usually.
Well, I think
what do buyers do, not what you should do.
I think what most buyers do is they find a house and then they call their agent.
Correct. Well,
they call an agent.
Their agent. What if they don't have an agent or their agent?
A lot of the times I feel like they end up calling the agent that is on that listing.
Correct.
Because they don't know.
Right.
Or they end up calling. No.
Okay.
Or they end up calling their aunt.
Yes.
Who just recently got licensed.
Yes.
And is maybe doing one transaction a year.
Yes.
And that's going to be their go-to person.
Correct. So the general process right now is that they will go out and they look for an agent. Sometimes they find it on the site. Now, everybody's a little different how they do this. Sometimes they will call their best friend who just recently bought a house and said, who did you use? Sometimes a family member is a realtor.
Yep.
Sometimes a close friend, whatever. And more often than not, I would say, or at least it seems like from my point of view, this is anecdotal, that most people who are buying a house are working with a realtor that was referred to them from someone else. Not typically just going on the internet and finding a stranger.
Right.
Most of the time. Now, I'm sure that happens, or it absolutely does happen.
Well, I mean, if you've never bought a home before, you don't know.
Yeah, you have no idea.
And what if you don't know anybody that has bought homes before? I mean, you don't know where to go.
That's right. So as a consumer, you have now been referred somebody, an agent that's coming to you. And then if you were a consumer looking to buy a house, what do you think you would look for in a realtor that you would want to hire? And then we'll get to the lender side of things, which is we are, but what would you start with realtor wise?
I mean, for both realtor and lender, I feel like it's kind of one of those things that's like you go to a dentist, get your teeth checked.
Yeah. And
you go to a mechanic to inspect your car.
Right.
I'm not saying that like, and this is kind of more on the lender side.
So let me rephrase this something real quick. So we both work for a mortgage company.
Yes.
We both do loans.
Yes.
Well, I mean, you do some loans, but you're our mechanic in the back.
Yes.
Putting the loans together, making sure they get through the process easily. And we work with a lot of realtors. Okay. So sometimes when we say things, it might be careful because we don't want to, upset anybody or put anybody feel like, by the way, we're not talking to anyone directly.
No,
like we're just having a conversation. So we don't have like people in mind when we're saying these things. But just to put a little bow around the situation. Yes. Maybe our opinions are going to be a little biased.
It is a little biased.
Okay. All right.
But I do kind of feel like it's kind of like one of those things that we do work for a mortgage company. This is our craft.
Correct.
Right? We perfect this every day. Just as a heart surgeon, that is their craft.
Right.
Not saying anything about bigger entities who might dabble in multiple crafts.
Right.
Not like your family doctor probably can tell you a little bit about your blood pressure, but might not be able to go in depth as to what's going on in your heart.
Yeah.
Okay.
Yeah.
So my suggestion is always to find a lender that is what they do.
Yes.
And that is their craft.
Correct.
Not also possibly taking your money,
car loans and checking accounts and all the other stuff.
Because
like if you're in America,
that's just something on the side that they do, right?
Like
it's just something on the side that they do. That's not their bread and butter, and that's not what they do every day. So are they going to be great at it? Some might be. I'm not saying that they're not. I'm just saying majority of the time.
Well, this is, what you're saying is proven in how this works is that the reason that when you talked as a buyer, if you talk to your realtor and they will have lenders that they're like, hey, I would work with these people. There's a reason they don't get money from it. No. Like there's no, there's no reciprocate. Like it's just, hey, I want your transaction to go well. And I want you to have a positive experience. So I'm going to give you to somebody who I know is going to give you a positive experience. And there aren't, I don't know. Do you think there's any realtors out there that are like, hey, call the American bank and work with them, or call the one that's running after you and work with them? I don't know if nobody listens to this, so I can't say Chase and Bank of America. Okay. Like, is anybody really referring?
They're not really referring the big ones. No.
They're not.
Now for realtors, for me, what has been really important to me and what I have noticed from even people that I have referred to realtors, is geographically speaking, majority of the time realtors will go anywhere and everywhere. They will. Okay. But what I do find that is also important is that just kind of maybe if you find a realtor, I'll take your wife, for example.
Yeah.
She is, I feel like sometimes she's like the face of Mansfield.
Mhm.
Okay. Like Mansfield moms, like I just love Susan first and foremost, but she knows this area. She knows Tarrant County very, very well.
Yeah.
She has a book of business here in Tarrant County. She knows all the areas you should be, the perks, the downsides, the cons. Like she knows all those things. So you kind of want to work with somebody who is going to know those things in that general area. If I were to call Susan and say, "Hey, I think I'm looking at a house in Houston," she'd probably say, "Okay, cool. Let's go do it."
Yeah.
But she might not know that market as well. She's still going to be absolutely helpful. And most agents are still going to be very helpful in the area you're looking for. But I kind of feel like, especially if you're trying to raise a family or looking for a particular area, you really want to want somebody that one knows what they're doing as far
Yes.
as a transaction and taking care of you and
Yep.
walking you through the process so
Yep.
that you're educated. Because at the end of the day, this is the biggest purchase you're ever going to make.
Yep.
And so I would like to be, and the more you know about it, that's in anything, right?
Yeah.
Like we sit there and scroll and educate ourselves on, I don't know, how to make a pumpkin pie.
Yeah.
And we're going to sit there and scroll and watch all these videos. Well, you need to kind of do the same thing with your agents.
Well, and I think that, a really good question to ask an agent is how many transactions have you done? I think that's a fair question because the thing about that is that if you've done a good, it's like with anything, right? When you pay the plumber to come to your house to fix your toilet, okay, it might take that guy 15 minutes to fix your toilet, right? And you paid him $300. So you're like, what the hell am I paying for? Okay, well, you're not paying for the 15 minutes of service that you got. You're paying for the 20 years of experience.
That's right.
That he's made mistakes, got the wrong equipment,
That's right.
broke pipe, all, hopefully not. But all of those things have occurred. That's what you're paying for.
Yes.
Right. So when you're hiring an agent to represent you, especially in today's market, I think it plays a big role. It's like, I would love to hire my, nephew and aunt and uncle or whatever, but if they've never done a transaction or if they've only done one or two,
it just might be a learning curve.
Yes, there might be. And you say might is an important word because I would say the vast majority of real estate transactions go pretty smooth. Would you agree with that?
But then they also have mentors too.
Yes.
New agents have mentors.
They work for brokers and they have help, and so it doesn't mean a new person can't do it.
No.
And if you have a relationship with that person and you feel like they're going to represent you, then they're still totally fine. But I do think the transaction question is a fair question to answer or ask because that gives you at least an idea of like, all right, am I going to be like, the guinea pig here or is this person know what they're doing and got it?
And has the support to do so.
And oh, by the way, just because you've done 100 transactions doesn't
this is true.
Yeah, doesn't necessarily mean you know what's going on either. So there's a give and take on all this. And I always personally in every decision that I make, honestly, when I hire vendors of any kind, is what's my gut tell me and how do I feel about it?
Yeah.
Because if I look at that person, I feel like they're feeding me a line of BS. I don't care if they are.
I think that's in anything. Yeah.
So, I mean, you just got to go with what your gut tells you. So,
yep.
All right. So now we've chosen our agent and now let's just say we're using the lender that, that they recommended, or we've called a couple people or however we want to go about that process. So, when you're talking about pre-approvals, now let's go back to our original conversation. So in a perfect world, when would you go about getting pre-approved?
So in a perfect world, if it was me,
yes,
not
no, and I would say knowing what you know about the business.
What you would want to do is you would want to get, if you know you're going to want to be in a home within the next 4 months.
I would say 6.
Or 6.
Yeah.
But like from our perspective, right? Like your credit report's going to be good for 120 days.
Yeah.
But anywhere between 4 to 6 months is great because let's say you feel like your credit might be a little bit questionable, then maybe start that process at 6 months so that your lender can help put you on a plan to get you ready for when you will become ready.
Or if you're self-employed.
Yes. All of that. So we can look at all this stuff ahead of time. Yeah. Sooner rather than later. So it's kind of like shopping for a car. And I actually just had this conversation with my brother actually 2 days ago. His car got totaled. He's got to get a new car. And so he's like, okay, well, let's go looking for cars. And I'm like, how about we call the bank first and we're going to get you pre-approved first to buy a vehicle.
Yes.
Once you get pre-approved for a vehicle, then we go buy a car.
Right.
Because you don't want to walk in and go get a car, just like you don't want to walk in with an agent and go to all these showings and find a house. And then all of a sudden, okay, now we need to go get a lender. And then the financing side, a lot of the times people feel like is the hardest side. When in actuality, if you get pre-approved first
It's easy.
and you go through that side, the hardest part is going to be finding the house.
Yes.
Honestly.
Yes.
Um,
Well, and another part of that I don't think people consider often, we do obviously because we have these conversations every day, is when you say get pre-approved, what a lot of people hear is, especially people that have good financial situations, is that what are you talking about? Like I make good money, my credit's good, I have the cash, who cares? I'll be fine. You probably will. Like I would say 90% of the time you would. And it's not that you would have an issue. The issue is then what kind of house are you trying to buy?
right.
Okay. Because in your mind, because you haven't shopped for a home in 10 years,
Right.
you're like, well, I'm selling my house for 400,000. So I want to go buy a $600,000 house because I'm trying to step up. Right.
Right.
Well, then let's assume you don't get pre-approved. You go find the house that you love and that your wife loves, or your husband loves, and your kids love, and everybody's in love with the house.
Yeah.
And then you call the lender and like, hey, look, I know I'm good to go, but I got to get this pre-approval letter, blah, 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 blah. And you go through the whole process. And then let's just even say you get under contract. And because you don't have a great lender who doesn't explain to you everything up front. And then you get that contract, then you get the disclosure from the lender and it says your mortgage payment is $6,000.
Yeah.
And you're like, what? My mortgage payment right now is $2,500. Well, yeah, but you bought that house 10 years ago and you paid $200,000 for it, and you're selling it for $300,000. And since then, the market has appreciated dramatically. Rates are higher and property taxes are up.
Yep.
So now your payment's $6,000.
Yep.
And if you're like, well, if I'd have known that, then I would have maybe scaled it back. So the point of getting pre-approved isn't just can you buy the house?
Correct.
It's what kind of house do you want to buy based off of what is available?
Yes. Are you trying to buy in Highland Park or are you trying to buy in Azle, right?
Yes.
Still a rural area. And I feel like the education process of that whole pre-approval side. So you have you have your pre-qualification side, and then you have your pre-approval side. So your pre-qualification side, we get your information. A lot of times we go by what you're saying. If you're a W-2 borrower, not self-employed, you're paid salary, you've got this much in the bank, right?
Yep.
Okay, cool. I think we can go ahead and get you pre-qualified. Hold your credit, you look great.
Yeah.
But then the pre-approval side is where we get everything from you, right? So we can go ahead and get you into underwriting, get you fully approved, so that at that point, there's no financial stress as far as you trying to figure out, can I get approved?
Yeah.
And two, what are my realistic expectations of what it's going to look like?
Yeah.
And I feel like lenders need to have a lot of originators, I know you do, have that kind of conversation with clients whenever you're pre-qualifying them, because you're kind of saying, it's kind of like, it's very opposite, because I feel like people who have never bought homes before, they think, okay, well, it's similar to buying a vehicle. And the car salesman is like, what do you want your monthly payment to be?
Yeah.
And we've all been trained to never tell the car salesman, I want my car payment to be this, right? But it's a little bit different in the mortgage lending world, because I kind of need to figure out where you want to be, because that will be about what size house or what amount you're able to go buy.
And just to clarify on that point too, because we're only going to be here for about an hour. We're going to try to go through all this. So there's so many facets to this that you can drill down to. But just to clarify on the what you want your payment to be thing, there are four components of of most payments, right? Principal and interest, taxes, insurance, and mortgage insurance. Mortgage insurance, once you know what type of loan mortgage insurance is what you pay if you don't have 20% put down. Mortgage insurance, once you know what type of loan you're doing, your credit score, your debt to income, et cetera, that number is set. It will not change. So you can't adjust that number. Mm-hmm. Your property taxes, once you pick the house that you want to buy, that number is set. It cannot be adjusted.
And it's vastly different depending on where you want to buy.
And there's a million reasons why.
That's right.
A whole other
I always tell people, are you trying to buy in Midlothian or are you trying to buy in Azle, Texas?
Or are you buying a house that has somebody's owned for 20 years and it's worth 2,000 or 20 or 250,000 on the tax rolls, but you're buying it for 450. Okay. That's a whole other thing.
Yep.
And that can change dramatically, by the way. And then you have homeowners insurance, which is substantially higher these days.
It is.
It's crazy.
New rates just came out too. Yep.
But that number two, unless you're using a discounted service that you, by the way, don't want to do, because if you ever have a claim on your home, it's a nightmare. And I won't name any companies, but I suggest the agent model, like working with a company that has an agent available that you can pick up and call. But even that premium, those agents, they're set. Like they can't adjust or whatever. So if you're getting a cheaper premium from a particular company, it just means that they're taking something away.
It's kind of like car insurance.
Yes.
I relate everything to cars. So it's either liability or full coverage. You don't need it until you need it.
That's right. And so, but the point of that is that number can't change very much, right? 25, $30 if you're using, a reputable, good company. And then your principal and interest, which is the only thing that the part that actually pays the loan, that part you can impact, but not unless you have a substantial down payment, because 10 grand saves you about $65 right now. Okay. Or there's a substantial change in the rates in the market, right? Because an eighth of a point, even on a $350,000 house, is about $25, right? So unless the market changes a quarter, a half, a full point, you're not going to see your payment change hundreds of dollars. So the point being is that you can impact your payment, but you can't really impact it dramatically. And once you pick a house, your payment pretty much is what it is. So that's why we ask, hey, where do you want your payment to be?
And where are you looking?
Where are you looking? Right.
Yeah.
So, all right. So now let's say that we've found the house, right? We've got.
Now, before you find the house, though, and you've gotten pre-approved or pre-qualified, pre-approved, whichever one. There's some things that are really important that lenders communicate to their buyers. I know you do this. I do this. A lot of originators do this, and that's the do's and don'ts of. Now we're in the middle of the transaction. Here's some do's and don'ts. Please.
Okay, we need to talk about that.
Yeah, we need to talk about that because I had a client one time. She showed up to my house, and she was so sweet. Sweetest couple ever. Shows up, she sits down at the dining table, and she's like, "Oh, I just want you to know, I did just get a car yesterday." And my face was like white, and then she just starts laughing, right? And she was like, "I saw it on TikTok. I just wanted to see what she would say." But there are do's and don'ts, right? Like there are some do's and don'ts that it doesn't matter what loan program, how financially qualified you are. There's some do's and don'ts. If we're tight, please don't go open new debt.
When you say tight, what do you mean?
Oh, on our debt to income ratio. So if we're already squeezing the max of what you're trying to buy and you already have a lot of debt that's on your credit with what you make per month, right? We take your monthly debts divided into your monthly income. And that is your debt to income ratio.
And everything's monthly. It's not, we don't care that you owe $40,000 on your car. We care that the payment is $400.
And we're looking at your gross income, not your net income. So we take that. So if we're kind of high already, like up in the 50s, then there's going to be like, let's not go open any new debt. Okay. Keep paying your credit cards. If you got credit cards, keep paying them. Pay them on time. One of the biggest do's is, or do not, is don't be late on anything. Okay. Don't be late. I don't care what you got to do, but don't be late.
That's right. Well, and here's the reason why. When you said earlier that the credit report is good for 120 days, it is. Okay. But every lender, we all run refresh reports for numerous reasons or whatever. And if something comes in and shows us that you were late on an account for some reason in the process of doing the loan, then the underwriter typically is going to trigger.
And we're going to have to show it's now current.
I need to know that it's current, and I may need a new report.
Because remember, you're asking to borrow a couple $100,000.
Correct. Yes.
Okay.
Yes.
Dues, keep working.
Yes. Don't change jobs. If you can all, man, that happens all the time.
Man,
I can't tell you how many people are like, "Oh, I'm changing jobs next week, so I'm ready to buy a house." I'm like, what?
Yeah, hold on.
Why?
Dude, keep working. And if you do happen to change jobs, please don't change your pay structure. I don't care how much more money it's going to be. If you're going to go from a straight salary position to all commission, that's going to be a problem for us because at the end of the day, we're looking at history and your reliability. It's just like a credit report. All a credit report is a report card that makes me believe that you're going to pay your bills on time, right? So, and as far as when we're looking at your income, when you're trying to buy a home, I need to make sure it's reliable and stable. So if we're changing from salary position to 100% commission and on the road, I don't have the history of it. So,
well, and you say reliable and stable and be like, well, I mean, I'm going to go sell insurance and there's insurance sold everywhere. So it's reliable and people make money. It's like, no, reliable for you because you have never sold insurance before.
Right.
And so therefore, because it's all commission or, in many cases, and you were a W-2 where your employer was constantly writing you a check every single 2 weeks or whatever your pay structure was, then that was reliable. We knew it would be there, but now we have no way to predict what you could be the most successful insurance person on the planet. But until you are, we can't project where you're going to be. There's no way to do it because it's about projecting into the future. And it's a reasonable assumption to project that if you've been on a job and you're working for an employer and they've guaranteed your employer, then it's a reasonable assumption to assume that you're going to continue on that job.
Yes.
Okay.
Yes.
But
same with like overtime too. Like if we're using, let's say it's not commission income, but it's still like overtime.
Yeah.
Well, I need you to continue to work your overtime hours you've been working if I'm using that income to qualify.
Yes. Well, and that's why the self-employment thing or the commission structure or what we would call variable income, any of that income is difficult because, or not difficult. It's not difficult to calculate. It's just difficult if you haven't been doing it before because we cannot project what it's going to be because we have no history of it.
Yeah. Or it could be the seasonal, like it could be something that's like higher in the winter, you know?
Yes.
But another do is continue to save. So you continue to save. I always tell people, listen, here's the number I need you to not put in your bank account at one time.
Yeah.
Don't put more than that at one time, but I need you to continue to save. So continue to save. Don't touch it. Leave it in a savings account and just keep putting it in there.
Well, but Jen, what if I'm closing in a week and,
and you had this mattress money?
Nebraska Furniture Mart just had a big sale and it only is going to last for this weekend. And if I open an account with them, then I get 25% off.
Yeah, you could totally do it. Go ahead. Except just know that even if it's 0% interest for the next 18 months, I have to take whatever balance that you just took and I have to use 5% of what that balance is to calculate it in your monthly debts.
Yeah. And you may be fine.
And you may be fine.
Yeah. It may not be a problem at all.
Yeah. But little triggers like this is things that we talk about up front so that it's not the day before closing, or if you're thinking about it, always talk to the lender about it because you need to make sure that you've got that space.
Well, and if your lender that you're dealing with or who have dealt with, if the conversation with them is, how much money do you make? Okay, this. Here's your credit score. Okay, great. Where do you have your cash? Okay, here. Okay, great. You're pre-approved. You're good to go.
Yeah.
Okay, go find your house at this price point.
Yeah.
And that's, if you don't know any better, you're like, sweet, this is awesome, right? But you don't have any other information about your situation.
That's right.
What type of loan are you doing? What kind of payments can you expect? Am I at the top of my range or am I at the bottom of my range?
Right.
Where do I, does it matter where my cash is? Because yes, I have 50 grand. Well, if the lender didn't go, okay, well, where do you have your 50
is it in
grand?
an account or is it in a
account?
trust?
You get it from your mom? Is it like, where's it coming from?
Yeah.
You want people, don't take the questions that lenders ask as
prying.
Yes. Like, I mean, well, first off, it's our job because, the bank's giving you several $100,000 for a home, but it's also, we're trying to protect you because we want to make sure that nothing is going to happen to you. And that's why we're spending a little more time on the upfront, because when we get to the end, you'll see how the rest of it should go pretty smooth.
Yes.
But the upfront is so important. And that's why the pre-approval process is so important, because there's so many things that you need to know about your situation. Now, the good news is once you know what it is, then it's pretty much stays the same. Like there's not going to be massive changes that occur. I always tell people the first conversation I have with you is usually about 45 minutes because we're going to go through all of this stuff. And then after that, you can text me and call me, but it's going to be pretty, if you're still here and you're still there, you're fine. All these things are good, but that's why it's so important up front to get all of this established, because your expectations are going to play a big role. And by the way, realtors, your clients' expectations on what they're trying to get, and the reason why you want to put them with good referral partners is because they need to know what they're getting into. So you're not running around showing them houses that maybe they can qualify for, but then when they get the payment, they're
way out of their price range.
Yeah, they don't want to do that.
Which is so if they do find a house, what I always tell people is before you put in an offer, call us.
Yes.
So that we can give me the address. Yep. Let's pull up the address. Let's see what the property taxes are going to be in that area.
Yep.
Let's kind of look and see what that payment's going to be.
Right.
And make sure that it fits. And this is something that the buyer's comfortable with.
And on the property tax thing, since it's there can be two houses right next door to each other that are the exact same price, the exact same neighborhood, and one can have $200 a month less in taxes. And the reason for that is because in the state of Texas, I don't know if this is everywhere, but in the state of Texas, you have a cap on how much they can raise your property value every year. And once the property changes hands, okay, now that's only for primary residents. If you're an investor, this doesn't apply. But for primary residents, once that property changes hands, the county can come in and reevaluate that property to whatever level that they see fit. Right. Now, as a lender, again, we can't make any assumptions as to what's going to happen because we don't know.
But what we typically do, like if I'm,
but I'm going to tell you,
it's property taxes are going to continue to go up.
Yes.
They're not going to stay the same. So you have a fixed rate, you have your fixed loan amount. this is your property and taxes. Let's say you pay your taxes and insurance within your mortgage payment where
Yeah.
you don't make it separately. That's not going to stay the same over the next 30 years because what's going to happen is your property taxes are going to go up. So let's say you're at your, I always have the conversation with the buyers as this might be your payment right now.
Yeah.
But a year from now or a year and a half from now, that might go up and most likely will go up.
Yes.
Because they're going to be, the county's going to be able to come in and reassess. Remember, at the end of the day, the county's going to try to come in and make money where they can too.
Yes.
Everybody's going to try to get a little piece of that little pie when
they're
slow.
And they're slow. And you may get by that first year and you're like, oh, hey. And you're like, no.
Yes. And then you get one, you get sticker shock and then you get a phone call later.
And then my bank screwed me.
Yes. And now you're like, oh my gosh, this lender and my mortgage payment's going to go up $300. Property taxes are going to forever go up. They just are.
Yeah. But your lender should tell you, like, and that's the point of calling about the payment is I would say to them, hey, look, based on where it is right now, your payment's going to be this much, but the property's valued at $250 and you're buying it for $400. So just know your taxes are going to go up. Well, how much? I don't know. You maybe want to plan for double.
Estimate.
I give you a rough idea, but there's no way I'm going to know. So I can give you a ballpark, but who knows at the end of the day, because it could be less or it could be all the way to the value or whatever.
You can follow certain exemptions or things like that. Yeah.
So there's just the point of this again is just that, and I'm glad that you took me down this road a little bit, is that everything, if you handle things up front well, okay, and you take care of things up front, then the chance for issues down the road are much, much less.
Yeah.
Right?
You hear horror stories of people are like, we were supposed to close next week and then now we're not.
Yes.
Well, I mean, again, if a lot of those questions were answered up front and we kind of dove into everything, I always tell people, listen, tell me everything.
Yes. I'm the attorney, not the judge.
Yes. I want to know everything because then I can work around it. But if you don't tell me these things, I cannot figure out how to help you.
Correct.
Don't hide things. I need to know. And it's okay. Any little question, because we'll have, like, let's say, as we get into the next week, let's say you get an offer. You are ready to put an offer out. We talk to your agent. They are going to negotiate a price and they're going to put in an offer. All that means is they're going to submit, hey, this is what we'd like to offer you for this home. And then that seller can accept or not accept, right? And we always call the listing agent, especially if you're already pre-approved. We call them and say, hey, we just want you to know our buyer's already pre-approved. They're good. You don't have to worry about anything.
Yep.
But at that point, now there's going to be other steps that have to go in play. So let's say your contract is accepted. Your contract gets accepted. Now what? Right? Like now the buyers will call and say, okay, well, I think we got a contract. What do we do now?
Yeah.
What you're going to do now is, remember that account I told you to continue to save in? You're going to cut your earnest money check directly from that account.
Yes.
Because 9 times out of 10, I will say that a lot of the hiccups that we find in closing a purchase transaction is the money.
Yeah, it's always assets.
Yeah, it's always the money.
Because everybody's got 6 bank accounts and they're getting money from their mom, and she paid them. The Christmas present she gave me was $5,000 in cash. And and then that's why it's
the
have to
sooner you do it, the better.
Yeah, you have to establish what the situation is up front, which is why we ask the questions, because we're trying to figure out, okay, I've got a puzzle here and I got to try to figure out. It doesn't mean, look, in all situations, we can figure out how to make it work. And I say all situations, in most situations, we can figure out how to make it work.
But we're trying to make it easier for you.
Yes. Because again, have a good transaction.
Yes. What is the least amount that I can try to get from you? Because you're already stressed out with, oh my gosh, I'm going to spend a few $100,000 on a house.
Yes.
I got to get movers. I got to prepare. You're already stressed out with all this other stuff. The last thing I want to do is, okay, well, because of the situation, now we need to go get all of these things.
Yes.
Where if we had talked about it up front, it might have been 1 or 2 things.
Now, when it comes to putting together your actual offer, when you find the house, I'm just going to touch on this just briefly. I would say there's kind of 2 schools of thought, or let's say 3. Okay. Is you either offer more, you offer the same, what it's listed for, or you offer less. Okay. Because remember, just because a house is listed for a price doesn't mean that that's what you have to pay.
That's right.
Now, what determines what's the good scenario is number 1, if you have a good realtor, they're going to be able to guide you there.
That's right.
But if you don't, for some reason, then which you need to get one, but if you don't, then you have to understand that if you're offering less, then that would indicate that they don't have any other options. Okay. If that seller has other options and you want to offer less, then they're not going to accept your offer under 99.9% of circumstances. Okay. If you want to offer at price, then there's several other functions within the contract that can make your offer better or worse. Things like, how much earnest money you're putting down,
how
what's your
quickly you can close.
option. Yes, how quickly you can close, who's paying the title policy, if there's any seller concessions being requested, things of that nature, how long your option period is. All of these things are negotiable and can be changed on your offer to make it a little bit more attractive or less. And all of these situations all kind of dictate or are dictated by the market. Are we in a buyer's market? Are we in a seller's market? Or are we in a balanced market? Well, up until very recently, maybe within the last 12 to 6 to 12 months, we've been in a seller's market for a
Mhm,
long time.
mhm.
And a lot of buyers lost control and power. Like for years, if you were an FHA or VA buyer, it was very, very difficult
Very
for you to
difficult
get a
for
house under
no
contract
reason.
for no reason.
For
Just,
no
yeah.
reason.
Well, I mean, reasons that from a seller's point of view, that makes sense. But, well, just because of the guaranteed
Yeah.
overprice and all that kind of
Yes.
stuff. You can't do that with FHA and VA. Um, but that's going to determine what type of offer that you ultimately make is what the market is. And that's why it's important to have a realtor, because if you find a house, it's one thing if you're just like throwing offers out there, which I don't know many people that do that. But if you find the house, because I know how it works. Every single house we've ever bought, we go look, we go look, we go look, we go look, we show up, we pull up in the driveway, and my wife's like, "This is it." I'm like,
Oh,
"Oh,
yeah, my
jeez."
foot popped. You know?
Your
Like,
foot. Oh yeah.
my foot popped.
Yes. Yeah.
Yeah.
Before you walk in the door, you're
Dude,
like, "This is the
listen,
one."
when you know, you know.
Right.
Susan called me and said from a buyer, I was already like, we had already had one offer out. We didn't get accepted. I was down
Yeah.
and it's okay. Like I always tell buyers, it's okay if your offer doesn't get accepted. That
Yeah.
just means that's not the one.
That's right.
And that's all that means. It's
Universe is
just
telling
not
you
the
you got
one.
another one out
That's
there for
right.
you. Yep.
And so I was already kind of down. And then Susan sent me the house that we're in now.
Yeah.
And I was looking at the pictures and I was like, oh, man, I just don't like it. I don't think I like it. And she was like, just come look. And because at this point, you've already told your agent, like, here are I always tell the buyers, give your agent like your non negotiables.
Yeah.
What is it that is most important to you? A big backyard or a small backyard and a big kitchen? Like, you need to know these things because it kind of dials down what they're looking for so that they can show you properties and not waste your time, not waste their time,
Sure.
but that you're looking at homes that you would actually be interested in. So she talked me into going to look at it. And I swear to you,
Were there any non-negotiables on that one, or you just didn't like the pictures?
I just didn't like
Okay,
it.
all right. But there wasn't anything where you were like, "I have to have this," and it would have eliminated another
No,
one
I
for you?
trusted Susan. I knew she knew what I wanted. But I walked in and I swear to you, my back foot like just I was like, this is it. This is the one.
I can see that.
This is the one.
Yes.
And we walked through it and whatever, I was like, okay, let's go ahead and put in
Yeah.
an offer. And when we put in the offer, now me being in the mortgage industry, I kind of knew what was going to go after that. But what I
Yeah.
have found is a lot of people, when you get an accepted offer, they don't know, okay, well, what's next?
Yeah.
What does the option period mean?
Yeah.
What is the inspection for? And people think that it's just the appraisal and it's not. And I always, always tell everybody, yes, a home inspection is optional,
Mhm.
but please
Yeah.
get it.
Even on new builds, especially on new builds these days.
Oh my gosh.
Yes.
We have a friend that literally brand new build,
Yep.
house completely flooded in the first 3 months
Yep.
of piping. I mean, they just don't build homes like they used to.
No,
Okay.
well, because they're not putting the same kind of effort. They're trying to make money. They're
I
not
know.
putting the craftsmanship
I
into
know.
it, but
That's not to everybody, but
no,
yeah.
but
Yeah.
there's a lot.
I know. But yes, the option period. So like
Yeah.
people, they don't know what that means. What does the earnest money mean?
Yeah.
All the earnest money means is you're just putting a down payment to basically hold on to the home.
Yeah.
On
Not to
your
the seller. It goes to
Yep.
the title company.
And
There's an intermediary.
you'll get
Yep.
credit for that at closing.
Yeah.
I have to document it.
Yeah.
So we always tell people like before you go cut the earnest money check, call your lender. Just
Yeah.
call them.
Yeah.
They'll tell you where to go cut it from. Make sure it's cut out to the right people. Cut it from a certain bank account. Don't have your brother write it for you because you couldn't get to the bank. So we'll kind of coach you through that.
Yes. Just because it'll make life a lot easier for you if you do.
Yes. And then the option
Yeah.
is to the seller.
Yes, that does go to the seller
Yes.
because that's basically your fee for writing an offer and for them taking their house off the market. But it gives you time to get your inspection done. So if there's anything of significance that is a a deal breaker, that you can walk away. You get your earnest money back. Even if you've paid for an appraisal, but as long as it hasn't been ordered yet, you should get that money back as well. In most cases, if you're a good lender.
Well, and the other thing is why vetting your realtor is so important too is most realtors who've done many transactions have home inspectors
Yes.
that they do business with that are reliable
Yep.
and that are dependable and that are quick and that are thorough and good to protect you.
Yes.
And so if it's a brand new agent, a lot of the times they'll have to kind of get referrals from who they know. But if you do business with somebody who has done those transactions, they have a home inspector
Yeah.
that can probably get out there in the next 24
Yeah.
hours.
Well, and that goes back to my point where we were talking about making the offer of, if you have an experienced realtor that's been doing it, remember when they're telling you we have to go in at full price or we have to go in over, they're not telling you because they want you to pay more money.
No.
Okay. Their goal is to get that offer accepted.
And they probably already know something.
Yes.
They've already probably called.
Yes. They're not trying to get an extra $100 out of your offer because, oh, well, they just want to offer more. No, 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 no. Because remember, if you don't win, they make zero, right? They
Right.
get no money.
Right.
They want you to win. So they're going to try to write your offer strong to get it accepted. So that way, and especially if it's the house, if it's the one, then it's like, look, there's 2 other offers
Because they've already called
that I know
and
of.
kind of got the little skinny.
Yes.
Get the skinny on it.
So if you want this sucker, like we got to go in, guns blazing.
Yep.
Or there could be the opposite. Yeah, they haven't. The house has been on the market for 120 days. They don't have nothing. So
Yep.
how low you want to go?
Yep.
And then, but there's a balance there too, because if you go in and insult a seller, okay, they'll just say no. They won't negotiate. They'll just say no. I'm not going to do that. We're like, what about this? No, no, no. Screw you. Like that's insulting to me. Now, granted, there are some sellers out there whose house is listed for an insulting price, right? Especially right now. So again, there's so many facets of this deal, which goes back to, you got to have professionals that are representing you in this, because this isn't just I'll just go find a house and write a contract and see what happens. It's not how it works. It's so much.
So much has changed.
Yes. And there's so much on the front side.
Yes. And then, so like once you get the inspection done, home inspector comes out, right? That has nothing to do with us.
Yeah.
The lender. That's just for you. And what people don't realize, and I find
unless it's VA.
Yes. But I find this more often than not, is that a lot of people don't know the difference between a home inspection and an appraisal.
Appraisal, yes. In a survey.
All an appraisal is an appraisal is just going to look at properties that are around this property you're buying.
That recently sold.
That are comparable to the house you're looking at. Yep. And they're going to establish a value. Yep. That's all they're going to do.
And they know what the price that you're paying for the home is up front.
Yes.
Appraisers get a copy of the contract before they do the appraisal, so they have a target to shoot at.
Yes. Now your home inspector that goes in, they're licensed. They have to, and they're going in. I relate it to, especially for first-time home buyers.
Yes.
What I relate it to is, if you've ever rented an apartment, when you first walk into the apartment that you're renting, you have this big long sheet, and you got to write down
all the little stuff
the little stuff, like every scratch you saw, every hole in the wall you saw, anything that does not look right, you write it down. You don't
want to pay for it when you move out.
Yes, because you want to get your deposit back, right?
Yep.
So the home inspector's job is to literally dissect that house and all your big ticket items: plumbing, foundation, electrical, your AC, like roof. That is what they are looking at. They are looking at all the big ticket items to protect you, so that when you do get into the home, because remember, the appraisal only establishes value.
Right.
I only look at the appraisal.
Yep.
So unless the appraiser is going to call out something like that is structurally or health or safety, I'm not going to really know, or foundation, then I'm not really going to know. But let's say you move in and now you have $15,000 worth of plumbing issues.
Yeah.
That's why home inspection is so important up front.
Well, and you have to remember with the home inspection as well, the inspector's job is to tell you everything that's wrong with the house, everything. And if they don't, then they can be held liable in some cases. So they're going to, if the bushes are too close to the brick, they're going to tell you, okay?
Yes, yeah.
It's going to be on the report.
Missing a GFCI outlet,
yes.
It's going to be on there.
Your inspection report's going to be like 150 pages, okay? Just know that. Even on brand new homes.
Yeah, there's a little piece of the fascia that's,
If I had a buyer call me one time, they're like, this inspection report's 25 pages. This house is a wreck. I'm like, that's a small one. Like, you're doing good. It was only 20 pages. Wow, that's good.
Yeah.
I mean, it might be 10. I can't remember. But the point is that the other side of it is, you have to get it, but you have to put it into context, because there are certain things about the house you can't change.
Yep.
You can't change where it's at. You can't change, the price to some extent or whatever, the neighborhood that it's in, the school districts that it goes to, all that kind of stuff, right? You can't impact that. Mm-hmm. What you can change is the type of flooring. You can change if a toilet's loose, right? You can, or you can ask for the seller to fix it, or you can get money for it. There's a lot of things. Just because you have just because you have an inspection that's got some things showing on the house, there's
Lots of
something
red.
wrong with every house.
Yes, yes,
Every
yes.
single house. Okay.
Listen, my house was built in the 70s.
Yes.
Okay.
Yes.
There was lots.
There's a lot of
there.
things, and a lot of things you can change, and a lot of things, in some things you can't. So if you can live with some of the issues, or get money for it, or get the seller repair, or whatever the case may be, then keep the house.
Yeah.
But
Well, and that's important to know that once you get your inspection back,
Yeah.
I tell them, call the agent.
Yeah.
Okay, I got my inspection back. So they think they call us.
Yeah.
And we're like, no, I need you to call your agent, because
Yes.
this is what your agent needs in order to kind of look through it and say, okay, we might need to go back to the seller.
Yeah.
Or I think we're okay and we can go ahead and proceed as is.
Yeah.
Right.
And again, experienced agent will help you. And they look, they're not going to go through and go, oh yeah, this house is perfect. No. They go through the, like, hey, look, this is
Yes.
not good. You probably want to ask, we don't ask about this. This is fine. This is normal. I see this all the time. You can easily fix that, or it's not a big issue, or whatever. They're going to be able to walk you through what the issues are, as opposed to, because if you take it to your dad, okay, and you're like, hey dad,
Yeah.
look at this. You're like, oh, that's it. Don't buy that
Yeah,
house.
yeah,
It's
yeah.
terrible. Oh, you're never going to.
And all of this is done during your option period that you
Yes.
negotiated on your offer. So if for some reason it comes back and it's absolutely like it's something a little bit more than you like, you don't, what do they say? Bite off more than you can chew, right?
Yeah.
If it's something too much, then that is your option to be able to go ahead and opt out of that property.
Yeah.
It might be the one that you thought was it and it was beautiful, but then you got cast iron pipes that are busted and electrical issues that people have wired together, and you don't want a hazard later, and you want to opt out. That's your opportunity to opt out. Now you're not going to get your option check back.
No.
Because
You
that
get
goes to
earnest
the
money check
seller,
back.
but you'll get your earnest money
Yeah.
check back.
And you spent the money on inspection.
Yeah.
I mean, that's a thing that you
But
bought.
that's something
You're
to
not gonna get
protect
that.
yourself. That's
Yeah.
kind of like almost like the cost of doing business,
Yeah.
right?
Well, and then
To protect yourself.
a foundation is a good example, especially in Texas, because soil shift all the time. I would say, I don't know what the number is. I would bet you 50% of the houses in Texas have had some sort of foundation work. Maybe it's 30%. I don't know, but there's a lot, right?
Yeah, unless you're like us, where we live by a creek and the soil is constantly wet.
Yes.
And we're fine.
Yes. So, but the soil shift a lot. Well, just because it's had foundation issues, or maybe even it currently has foundation issues, doesn't mean it could be an easy fix. It could be something that's insignificant. So there are times, even with your option period, that you can extend it and say, hey, look, I know we did a 7-day, but our inspector said we needed to get the foundation checked, and we really love this house. So we're going to go hire a structural engineer and have them come do an actual, check. Don't hire the foundation company, because, a lot of them, not all of them, but a lot of them will, oh yeah, you need 50 piers. It's going to be 20 grand.
Hire a professional.
Hire professionals. The structural engineer will come out. He'll look at the property and say, no, you're good. And here's why it's settling in, whatever. So you might have lost out on a house just because your inspector said you had a foundation issue, when you could, if you just dug a little deeper, there wasn't that big of a problem. Or maybe there was. And that means you time.
That's right.
Out.
And again, their job is to pretty much dissect that house for you.
Yes.
It does not necessarily make them the expert in that realm.
Yes.
If they say the roof looks terrible, maybe a roofer needs to come out.
Yep.
If they say their foundation looks terrible, maybe a foundation company or structural engineer comes out. They're just pointing out the possibles for you.
And since we talked about earnest option inspection, those are the 3 things of cash significance that you're going to have to write up front. That's pretty much on every single transaction. You're going to have to write
the appraisal.
And the appraisal. And that's the 4th thing.
Would you get credit for that?
Yes. So, but your earnest money goes back to your credit on your fees. Mm-hmm. Your appraisal goes back as a credit, and the option money
it does
goes back as a credit as well.
Yep.
Yes. So so those 3 things will go towards. So if you needed $20,000 total to close, and you put up, let's say, $5,000 up front between option, earnest, and appraisal, then you will only bring $15,000 to close. It'll be reduced. So that money doesn't just get lost into the ether unless you back out of the contract within the option period, and then you give up the option money and the inspection money.
Yep.
Now the inspection doesn't go on because it's not part of our fees.
Yeah. And sometimes people are a little bit gun shy too, because again, this is the most money they're ever going to spend.
Yes.
That they're afraid that once they get past that option period, that they're not going to be able to opt out or pull out of the property. And there are certain things that will allow you to opt out of the property later on.
Yes.
But not much. But there is certain things that will allow later on.
Yes. So now that you have your property under contract, and by the way, when we
got a contract. That was a whole lot. It took a lot to get a contract.
Again, that's why it's important up front. But you got the house under contract. Let's say the inspection went great. Let's say that you're past your option period. Now you're what they call pending, in the system. That's the realtor speak.
Yes.
So now your house is the house is pending. Now your lender, who's already been doing stuff behind the scenes, right? We order the appraisal. Now, typically every lender does a little different. For the most part, we're going to order the appraisal as soon as we can because it's going to take usually about, let's say, 2 weeks. I mean, it's running a little bit quicker now these days because the
Definitely
market's slower,
quicker.
but at the height, you might've been 3 weeks.
Yeah.
Now we may be down to a week,
Yep.
something like that. But we're going to order it in advance because we want to get you to the finish line as quickly as we can, assuming, that's what you want and that's what the seller wants.
And it also lets you know, is the property going to come in at
Yeah.
value? But
Yeah.
like at this point in time, your agent would have already kind of looked at all of the possible scenarios and they would have been like, okay, I think this property is going to be fine. Now, if they would have known upfront, if they're listing it for something crazy,
Yes.
and you're coming in and asking, the agent probably would have told you at the beginning, like, hey, I don't think this property is going to appraise, but we can cross that bridge because you love this house so much. We can cross that bridge when it gets there.
And that is the agent question. I get that question. Do you think the house is going to appraise? I'm like, I have no idea.
Yeah,
like,
we don't know.
Not what I do.
We don't know.
I don't.
Not our professional.
I don't know. Ask them. I'll call your agent and ask them. What do you think?
Yeah.
But we as lenders don't really know the answer to that. But
now the only time where we don't collect for the appraisal up front is going to be on your VA loans.
Yeah.
So veterans, we collect that at closing,
Yep.
or if for some reason the transaction doesn't close. Otherwise, everybody else pretty much pays for those up front.
Yes.
Our veterans don't.
Because if we get your appraisal in and it's short, well, we still had to pay the appraiser to do the appraisal, regardless of if you go through with the contract, we still had to pay them. Now, as far as the appraisal is concerned, if there are again 3 scenarios that happen with appraisals. Okay, it either comes in at value, which is pretty typical,
and as is,
or it comes. Well, I won't even get into the repairs thing yet.
Okay,
or it comes in above value, which happens.
Yes,
rare,
which is great.
Not rare, but not often. But it happens, which is awesome.
Because you instantly have equity.
You instantly have equity. Now, it doesn't affect your loan, by the way, just so you know. Just because your house appraised for more doesn't mean you have to have less down payment, doesn't mean you have anything other than congratulations, you have equity as soon as you move into the house, and your agent did a great job getting you that house for that price.
Yep.
Or it comes in low. Okay, well, if it comes in above, great, nothing we got to do. If it comes in at list, great, nothing we got to do, assuming it's as is with no repairs, subject to, etc. But if it comes in under, okay, what are our options at that point?
So if it comes in under, the first thing we do as lenders is we'll call the agent to let them know, hey, the property looks like the value came in under. If for some reason the agent or the seller really is adamant that they really feel like, that something was done incorrectly, they can give us supporting documentation.
Absolutely.
Maybe sometimes square footage could have been wrong,
right?
Or
different
updated comps, right? Maybe new homes just sold that closed in the last month that weren't notated.
Yep.
So sometimes they can give us additional documentation that we can try to go back to the appraiser for a reconsideration of value, is what they call it. And then let's say the appraiser reviews it and says, okay, yeah, you know what? You're right. I made a mistake. My bad. Here you go. Here's an update. Great. We move on. If there is not, though, we provide supporting documentation and it does not come up, then it's definitely overvalued.
Which, just so you know, that is often most likely the case.
Correct.
Unless there's a mistake, meaning that the square footage was wrong or something, it had an extra bathroom or whatever that was missed. Unless that happens, very rarely, just from anecdotal experience, do I see we provide additional comps. Typically, the appraiser can, and they'll tell you, they'll come back and say,
oh, yeah,
I already used that one, or I didn't consider that one for this reason, or
they
whatever.
They work in big, sophisticated softwares that plug in literally everything. They try to finagle as much as they can and try to help. They're not out to get to buy or anything. They're just trying to make sure that what you're buying is worth what you're buying.
So if it comes in low, then it's usually going to stay there.
Yeah. So let's say it doesn't change. Let's say the value reconsideration did not change. At that point, we'll call the agent back and say, hey, looks like we tried to do the reconsideration of value. Value didn't change. At that point, what you have a couple options. The agent will go back to the seller and the seller's agent for you and try to maybe negotiate that price to come down to that price. Or you could have them meet halfway where you cover the difference and they're going to come down a little bit. Or if the sellers are unwilling to budge, then that is your right to opt out of that property at that time because it did not appraise.
Right.
And you can get out of the contract.
Or you can pay more,
or you can pay the full difference,
which
if you love it.
The last, up until, well, let's just say 2021 and 2020. That's what people were doing. They were paying over it, which is why if you were an FHA or VA buyer, had a hard time doing it. Because if you were a conventional buyer or cash buyer, you could pay over. A cash buyer doesn't even need an appraisal if you don't want one.
Yeah.
But with a conventional loan, if I want to guarantee the purchase price, I can. It doesn't mean as an FHA buyer you couldn't pay over if you chose to,
Yep.
but you didn't have to.
Yeah.
And so that was an out for you in the contract. If the house came under, you would back out. Well, if I'm a seller and I've got 15 offers and 4 of them or 5 of them are conventional and 10 are FHA and VA, well, if these 5 are going to give me appraisal guarantees that they're going to pay no matter where the appraisal comes in, then I'm going to go that rate. You know, it's just,
so we're not seeing a whole lot of that now.
No.
Yeah.
No, right now that's not really a thing.
Yeah.
No, sellers are offering money right now to get there. So,
so at this point you would have had, actually we've already been working on your file in the background, right?
Yes.
So like appraisal before the appraisal comes back, you probably would have already gotten an approval. And what that means is
if you did it perfectly, you should have already got a loan approval
before you even had a contract. Yeah. Because we like to take your files and have them fully approved in underwriting.
Right.
So I like to think of it as a, how I try to relate this to people who have never bought a home before is I relate it to, think of it like a staffing company. You come in, the buyer comes in looking for a job. Right. And there's a person at the staffing company that is putting together your resume, if you will. So your loan file. And they are putting it together with a pretty little bow on it. And they're putting all your documents that you put in there. And then they are presenting it to the employer they're trying to get you hired at, which is, i.e., our underwriter. So they're putting everything together, putting it to the underwriter, and then the underwriter reviews it. So you probably would have talked to not only your loan officer, but you probably might have even talked to either a loan officer assistant to help collect documentation, or your processor. So your processor is the one that's collecting documentation to send it into your underwriting department. The underwriting department, when they get everything, what they're basically trying to do is they're filling in the little holes. Sometimes, I hate to say this, and I'm not being mean to any of my doctor friends out there. I'm just saying I feel like sometimes we are held to higher standards than doctors sometimes, okay? The guidelines, and I just closed up, we just did a loan for a friend of mine who, it had been 24 years since she had purchased a house, okay? 24 years. And so she's self-employed. So when we went to go get documentation and stuff, she was like, boy, this is a lot. And I was like, yeah, it's changed quite a bit. So what we're trying to do up front, there'll probably be 3 points of contact where we're going to ask for documentation so that you're not feeling like you're constantly having to provide additional documentation. You'll provide documentation at the front when you're getting pre-qualified and pre-approved, right? I need you to, whatever you're putting on the application, I need you to be able to prove. If you say you make $50,000 a year, I need you to give me documentation to prove it, right? If you say you got 50,000 in the bank, I need to see your bank statements to prove it.
It's not that I don't believe you.
Not that I don't believe you, but I have to prove it.
I have to give it to the underwriter. They don't talk to you. I do, but they don't.
Yeah, I got to prove it. So we would have got it at the very front end. Well, at the very front end, we're only getting enough from you to be able to pre-qualify you so that you can start going shopping, right? And we're getting pre-approvals from underwriting in a perfect world. That way you can go ahead and go shopping. Well, then once your processing team gets your documentation, they're going to look at it, and now they're going to look at kind of the more granular items that they're going to need.
How many pages it has.
Yeah. If the bank statement has 8 pages and I got 7.
Or if you sent me a picture and it's cut off and I can't see it, or it's fuzzy.
Or, hey, you said you lived here, but it looks like your credit report shows here. Can you
I know you labeled that file W-2 2022, but it's actually the 2021 one again. But I already sent it to you. Well, I know, but it's not, you didn't, because it's 2 different.
That's right. So we're getting a little bit more granular and kind of perfecting that file so that when we do get it to underwriting, everything as much as we can is in there. Okay. So we get it into underwriting. That typically takes 24 hours for us.
Okay. So on that point, okay, I want to say that if you're a buyer or if you're a realtor and you call the lender because your conversation has gone dark or something, then if you go to, sorry, there was a comment that came up. I got distracted for a second, but so if you call the lender and then the lender says, well, it's in underwriting. Okay. All right, cool. Well, when's it going to come out around? Well, it takes a couple days. I mean, it could be like a week, before it comes out. Okay. Well, that's not correct. Okay. As far as now, it might be in line for underwriting, possibly, if they're that busy, especially these days, they shouldn't be. But even then, it shouldn't take that long. I mean, the most at any bank, it only takes an underwriter a couple of hours to actually underwrite a file, right? Would you agree with that?
Yeah.
somewhere in
It
that
could take
neighborhood.
anywhere between literally 15 minutes to 4 hours.
Right.
Yeah.
Just depends on how complicated it is. But
Uh-huh.
once a physical person gets a hold of your file and goes through it, the timeline is 15 to, it's less than a day for sure. Right.
Yeah.
And then they're going to have questions. They're going to send you conditions on what they're looking at. But if they're telling you it's been in underwriting for 4 days or so, then there's something
There's
probably
something
wrong.
going
There's
on.
something going on
Yeah.
and you
Yeah.
need to ask more questions.
Yeah.
So,
Um, and but a lot of the times, like I said, we try to get you pre-approved ahead of time through underwriting so you don't have to question. And also, do you have to get pre-approved by underwriting? No, you don't have to.
yeah.
The reason we do it is because in the market that we are in, we're trying to find any advantage for you as a buyer to help when you're putting out on offers. So you don't have to get pre-approved, but if you already pre-approved before you have a buyer or before you have a property, it allows your agent to have a little bit more room when they go in to put in an offer.
Yeah.
We might be able to close sooner
Yeah.
because we can get an appraisal back quicker and you might be able to compete with other offers that are out there,
Yeah.
right? That's all we're trying to do. Do you have to get pre-approved? No.
No. Well, and then that's a point, Coach Bugby brought up there, and that if the buyer doesn't have to be pre-approved because
Oh,
they
yeah.
can't discriminate. Okay. But we're not saying you have to be pre-approved. You don't have to do any of this stuff.
Yeah.
But if you want to get your offer accepted and you want a seller to consider it in most cases,
Yeah.
they're going to request that
Yeah.
in order to look at your offer and accept it.
It's just anything where we can give an advantage.
Yes. You're just trying to get an advantage.
So your file has gone to underwriting, right? That means
Yep.
the processor has packaged your file. We've submitted to underwriting.
Yep.
Right now, that's taken pretty much 24 hours.
Yep.
An underwriter will have a decision in 24 hours. Okay.
Yes.
Unless it's the last day of the month, like today, and loans came in today, you might not get it by the end of the day today.
Yes.
It might be Monday morning. Okay.
Yeah.
And all that means is the underwriter has looked through it and they're just basically double checking everything that the processor has submitted. And they're saying, okay, we will give approval to give this person $400,000
Yeah.
if you give me this, this, and this. And they call that approval with conditions, right?
Yeah.
So you have an approval and then there's conditions that we have to meet. So if you hear anybody talking about conditions, the underwriter condition for this.
It's not a bad thing. It's
Nope.
a very normal.
All that means is the underwriter has said, cool, you're approved, but I need to have X, A, B, C, D, E.
Yeah.
Okay.
And real quick, before we go on that. So, one other thing on this is every lender we have underwriters, physical humans that look at your file, but we also all use automated underwriting. Okay?
That everybody uses.
Every bank that does a mortgage loan, does, small little bank that wants to do no, okay, maybe not, but I'm saying, and that's not a, FHA, Fannie, HUD, whatever type mortgage loan, but anybody that's doing one of those, we all use an automated underwriting system. And what the automated underwriting system says is that me as a loan officer, when I fill out or you fill out your application or I double check it and we go through it all, make sure it's right. When I submit that to the automated underwriting system, okay, with everything that's in there, it's going to give me basically, there's nuance to this, but thumbs up or thumbs down.
That's
Either
right.
This is good or no, it's not.
Yep.
Right. We won't get into maybes because there are some maybes there. But it's either going to be, and I would say 95% of the time you're good or you're not.
Yep.
So if you're good, it doesn't mean that you're good. It means that the information that was provided in the application along with your credit report, because it doesn't look at your documents, it just looks at
your credit,
what I put in there or what you put in there and what the credit report is. If all of that is correct, then you're good, right?
Yes.
Your loan's good. If whatever I put in there is, and it says your loan's bad, it doesn't mean it's bad either.
Not necessarily.
It
just might mean it wants something else.
Yes, it might mean that maybe it wants your assets to be a little bit more. Maybe, we didn't include your second job that we can because you've been there for 2 years and we were leaving it out originally, but now we're going to put it in. Or maybe it wants you to have a co-signer because your credit's not real strong or whatever the case may be. Now, it doesn't tell us that. It doesn't say, hey, no, but if you do these things, we'll say yes. What it does say is, no, I don't like this as it is. So as loan officers and as banks, we have to go, okay, well, how do I solve this puzzle?
Mm-hmm.
How do I go in and fix this problem? What do I need to adjust? How do I fix it? And we kind of play with it a little bit, but then if you do have the thumbs up, then we have to send it to the physical human that's going to double check all of the documentation.
That's right. And a perfect example of that is we provide a pay stub. Okay. And when we filled out the application, let's say the buyer didn't put that they have child support, right? But then we had the pay stub and now the pay stub shows that there's child support going out. And so the automated system does not recognize, it's just recognizing what we input.
Right.
So if at the beginning the buyer says, "Oh no, I just get paid hourly, nothing more." But then after we kind of do a little bit more digging, because anything you put on the application, you have to be able to prove,
Yep.
right? I look at it and now we're like, oh, it's actually kind of split up with
Or I work 40
bonus,
hours a week and really only
overtime.
work 32.
Yeah, and you're not working a full 40 hours.
Yep.
And now I see child support that's on here. So we have to account for those debts. And now those things change. Well, now you went from base income, that is just your standard base, to possibly variable income. And that could change your automated system. So it's the automated system only runs with the validity of the information that is being entered.
That's right. Bullshit in, bullshit out.
Yep.
That's how it works. Well, and again, we're going to say this, this is going to be a long one, a little bit longer today. We're a little over time, but so I acknowledge that for anybody listening. But going back to the beginning, that's why it's so important up front to get all this stuff done, because these are the things that can come up, and it's not malicious, right? Sometimes, and I'm sure everybody's been I've been guilty of this before early in my career, where you don't ask enough questions, right? You don't dig deep enough. Okay, I'm self-employed. Okay, great. How much money do you make? I make 100,000 a year. Well, some people go, okay, cool, 100,000 a year. Move to the next question. Oh, no. Now doing this for almost 15 years, I go, okay, well, that's great. But
what does your tax return show?
What are you paying taxes on? Oh, I pay taxes on 100. Okay, maybe you're right. However, let's go ahead and let me see the tax returns, because I don't think that you're lying to me. I just don't think you understand fully what I'm asking.
Yes.
And unless I don't explain it well enough, which maybe I don't sometimes, then I need to see that document before I'm going to be like, yeah, you're good to go start looking at homes.
Well, yeah, because we don't want to get somebody's hopes up.
Right. We don't want to. We want you to have a good transaction,
a good experience. So
good experience.
And honestly, almost every buyer that we've ever talked to, while they're shopping, in the very beginning part of the transaction, we're all so eager.
Yeah. Everybody's happy.
Let's go ahead and, okay, what else do you need? What else can I do? What else can I go get? Right? It's when it gets later on in the transaction where it's kind of like, man, why haven't we talked about this in the beginning?
Yes.
You knew, like, why didn't you ask me this in the beginning? So that's why we kind of go so far in the beginning. So because we don't want those hiccups.
No, we don't want you. We want you to get the house that you want. We want you to close when you want to close. We want you to close early. We want you to get there to the finish line with a big smile on your face,
and say the hardest part was finding a house.
Yes. Well, and this is something that I tell buyers all the time when I talk to them. I pretty much tell everybody, because we'll go through how we're compensated, right? Speaking of compensation these days, when it comes to real estate, I tell people all the time how we get paid. And just so everybody knows, okay, this is how lenders, loan officers get paid. Our compensation is based on the size of your loan. That's it. Mm-hmm. We don't get any more money for your interest rate. We don't get any more money for your closing costs. We don't get any more money for the type of loan that you do. Nope. None of that stuff. We get paid as a loan officer a certain percentage, and it varies depending on companies, of your loan size. And that's it. And that's because we really don't have any control over that. There's no incentive for us to be able to charge you more based on giving you a higher rate or more closing costs or whatever. So what I tell buyers is, my incentive in the transaction is that I want this transaction to be amazing, and I want it to go smooth, and I want you to have all your questions answered. And I want everything to go exactly how you want it to go, because after you close, I want you to tell your mom, your brother, your cousin, your friends, your coworkers that we did a great job. And if you're ever going to get a home loan or you're ever going to buy a house, use this agent and use this lender.
Yeah, because we do that in everything.
Yes.
In anything, like we live in Mansfield.
Yeah.
I use John's Heating and Air Conditioning. You want to know why? Because they're freaking incredible. Yep. They're a little family shop, and they take pride in what they do.
Yep.
I refer them to everybody because I have had other companies come to my house and say, no, you need a whole brand new machine. You're going to need to cough out $10,000. They come and they're like, oh no, the valve was just turned wrong. We're not even going to charge you today. Right. Yes. You want to deal with the professionals and if you refer out your handyman,
you're putting your reputation on there.
You're going to do the same thing for your lender, your realtor, right? Because it was a pleasant experience for you, and you want that for the next person who you happen to talk to.
Well, and that's that's the whole point. That is our incentive. Our incentive is to do more loans in the future, not just try to get every nickel out of this one we can. And it's the realtor too. It's the same thing. Yes. Like, they don't want to sell you a house $10,000 more that you don't want, because then you're going to walk away from that transaction pissed off that you paid
Yeah.
more than you thought you should have paid, et cetera. They want you to get the house you want at the price that is going to get you the house. So then that way you're like, man, he or she went to bat for me, and I really appreciate that person.
And I got equity in my house.
Yes.
And yeah, exactly.
So, that I think sometimes from the consumer's point of view, and I understand it because it exists in a lot of worlds, and really prior to, let's say, 2008, right? I mean, on the lending side of things in particular, there was a lot of shady stuff going on. I mean, there were people that get in charge stuff on the backside that they didn't realize, or
I've only heard horror stories. I wasn't there for that.
I mean, I wasn't there either, but but the example I heard even today, or had brought up, was, with what's happening with, the realtors and NAR and what's going on, it's not too dissimilar from what was happening to us or our industry in 2007, 2008, in that there was an issue with, did buyers sign their loans? Did they get disclosed all the information on that loan to be told what they were paying and how much? Yes, they absolutely did. Did they understand it? Did they read it? Did the lender explain it to where,
yeah,
maybe not. Should they have? Okay. You could say, well, they're grown ass adults. They need to figure it out. Yes. But as a result of how everything worked out, our entire industry changed.
That's right.
Okay.
That's right.
So just agents out there, take that as a little bit of now again, they're different, but they're similar. So you got to be aware that, our job as lenders and realtors' jobs is to make the transaction as smooth and easy and as beneficial to the buyer and seller as possible, because we want to do more deals in the future. We want to get those referrals, and that's the biggest piece of it. So, all right. So then we've
gotten conditions
submitted. You've gotten conditions.
Yep, we got conditions, right? Because that's an approval.
Yes.
Underwriter's like, I'm going to approve you if you give me these conditions.
Yes.
Some of those conditions, I always tell people, sometimes conditions breed more conditions.
Yes.
Right?
Yes. And we don't know what we don't know.
I don't know it, because now I'm going to go, because the underwriters reviewed it. They've looked at it and they're like, oh, hey, maybe you missed this on
So
your
this is all I need, right?
statement.
These 3 things. This is it, and then we're done.
Yeah.
This is it. We're done.
Yeah. It just depends on what I get back. Okay. So when let's say I get bank statements back, and now you didn't do what we talked about in the beginning,
right?
Do's and don'ts, right? Don't deposit more than X amount at a time, or whatever it is. But let's say there's a big deposit. Well, now I got to figure out where that money came from.
Right. Which it could be okay.
And it could still be fine.
But it may require more documentation.
And the only reason why we're asking is because we have to ensure that you didn't take out another loan.
Yes.
That we have to count in your debt to income ratio. That's what all of this is about. Now, also remember, if there's something that pops up, let's say we didn't have to have your tax returns for some reason in the loan file, but in your bank statements, there's a payment to the IRS. We're going to have to question it, because at the end of the day, remember, what you put on the application, we have to prove. So if I'm saying this is all the liabilities you have, then this is all the liabilities you have, and I got to approve it. But if there's something else that's telling me that you might be paying the IRS, then now I'm going to have to go dig a little bit deeper and get more documentation to figure out what that is.
Well, even in the entire process of doing the loan, and I explain this to people often, is there's, this whole standard thing. There's 3 things: credit, income, and assets, right? Those are or debt to income. Those are the 3 things that we're ultimately looking. I mean, there's others.
It's 5.
Okay. But the house,
property,
the house, right. No, I know, but from just the buyer's point of view on what they can do to buy the house, it's credit, their debt to income, and their assets, right? So credit is very black and white in most cases.
Yeah,
it's right there. It's either good enough or it's not. And if it is good enough, well, then it may not be good enough, because there might be a few other things about. Because like if your credit's terrible, but you have a low debt to income and a lot of cash, sorry, you're not getting a loan. If your credit's really good, but your debt to income doesn't work and you have the assets, you're not getting a loan. If your credit's really good and your debt to income's awesome, but you have no money, you're not getting a loan.
Gotta have salt in the
game. So you have to have all 3. All right. But credit's pretty cut and dry, right? When someone calls me and says, oh, I got denied because I have a bankruptcy, I'm like, how do they not know you had a bankruptcy? It's on your credit report. Like it's right there. The one I saw, it's right there. So that's not something that they can come back later and say, oh, they didn't know. No, they knew, because they had your credit report from the very beginning.
Yep.
Your assets is something that can get complicated, right? Yes. As far as the documentation is concerned.
Yes.
Right. But at the end of the day, if I tell you need $25,000 to buy this house, and you have $25,000 that's from sources that I can document and use, then we're good.
Yep.
It doesn't matter that you have $200,000, because unless you need reserves or something like that, it doesn't make any difference about that extra money. I don't need all of your assets because it's not necessary for the transaction.
That's right.
So my point of that is the thing that lenders spend the most time and the most effort on figuring out is your income and your debt.
Mhm.
And 90% of the work that we do in determining if you can qualify for a loan, because we know your credit right away,
Mhm.
and we have a plan, hopefully, for your assets right away. So now we're trying to figure out, do you make as much income as you say you do? And is it in a way that we can classify it and use it correctly?
Mhm.
And then is there any debts out there that aren't on your credit report that I need to know about? And that's what all the reports and all the data aggregators that send us stuff like, to tell us if you have default student loans that are on your credit report or
Oh,
whatever.
yeah, it's listen, if you're getting a government-backed loan,
Yeah.
which IE is like USDA, FHA, VA, right? If you're getting a government-backed loan, I always tell people, Uncle Sam's gonna get his money
Yes.
one way or another.
Yes.
If you owe and you're defaulted on federal student loan debt, that is government money,
Yep.
and they're going to get their money one way or another. You're not going to be able to get a government backed loan if you currently owe the government money and you're
Yes.
defaulted in it.
Yes.
So at the end of the day, just know Uncle Sam's going to get his money.
Yes. So when you were explaining about the conditions, we have the conditions from the approval because we're trying to just make it all look pretty
Yep,
and
we're
get
just
everything
tying it
that
up
we
with a
need.
bow.
But
Mhm.
the underwriter generally says, "Hey, this loan's good, but I need a few other pieces because I had a question about this or I had a question about that." And as long as those pieces don't generate significantly new questions or
Correct.
significant new documentation, which most of the time they don't. It's
Nope.
just basic stuff because we've done our job ahead of time
Mhm.
and we know where we're at. Then at that point, once you submit those back,
Yep. So
then
your processor is going to put it all together
yep,
and they're going to submit it back to underwriting.
yep,
Um,
another 24 hours in most
Yep,
cases.
and
Yep,
they're just reviewing the conditions that the underwriter put on
yep,
there initially,
yep,
and then at that point, um, you'll get a clear to close.
yes. Now, your loan's
Now,
clear to
there could have been
close.
some stuff in between there.
Sure. Now let's talk about the closing disclosure briefly,
Uh-huh.
because that's a big piece of it. So CD closing disclosure, HUD statement is what they used to call it. It's not called a HUD anymore. I still have people ask me about that.
Yeah.
Can I get the HUD? I'm like, there's not a HUD anymore. But
Well,
you're
there is if it's a cash transaction, I guess.
Oh, yeah, I guess so.
Yeah, yeah.
But your closing disclosure is something that you'll get provided up front in the very beginning when you disclose your loan, and it has your interest rate, how much cash you need to bring to the table, what your costs are.
Your loan
Now,
estimate,
your loan estimate, sorry. Once you have that loan estimate up front,
which is not really an estimate anymore,
yeah,
technically.
it's got to be pretty dialed in.
Yeah.
There can be things that change,
Mhm.
right? But it's usually related to things that we don't have control over, like your taxes or your insurance or stuff that the
Yep.
title company is going to charge you or whatever. But it should be pretty solid, and your lender should give you that number up front. You should know what your rate is, what your payment's going to be, and how much money you need. You should
Yep.
know that the minute you should know that prior to even writing your contract.
That is true.
But at minimum, you should know, the
Within
moment.
3 days of having it.
Yes.
Yep.
And then when you go to closing, you'll actually get your final closing, or excuse me, your preliminary closing disclosure,
Uh-huh.
because in most cases, and every lender is going to be a little different. Most of the time, once your loan's approved, we can issue the closing disclosure at that point.
Yep. As long as your interest rate is locked,
Yes.
you're approved.
Yep.
And we've pretty much kind of got like, your homeowner's insurance. Sometimes
Yep.
they're still shopping, but as long as we have a quote or something we can go by. But the most important parts there is that you're approved, you're locked. As far as your interest rate is locked in.
Yes.
We have your title stuff, then we can go ahead and get your closing disclosure out.
And realize that lenders and realtors aren't the only people in this transaction. There are title companies, there are insurance agencies, there are
We're big
appraisers.
babysitters
Yes.
on this side.
So especially with this closing disclosure, there's a thing, just so everybody knows, when the closing disclosure goes out, it has to go out 3 business days prior to the closing. Okay.
They call it consummation.
Yeah,
That is your technical term.
Okay. All right.
Yeah.
So it has to go out 3 days prior to that. And then, but the one that you get 3 days prior, we want it to be final,
Majority of the time it is.
but it's not always.
Yep.
And that usually has to do with either we are changing insurance, and I don't mean we, I mean, you haven't got us your insurance information yet, or we don't have it yet. Or, and this happens sometimes where we send it to the title company and they know that we're closing, in a few days, and
Yeah.
maybe we
Like
don't
a
get,
week and a half from now.
yeah, we don't get it back until a few days before closing. But the reason that the number can change is because we have to have, especially from the title company, they have to give us their fees so we can balance everything out.
And a lot of the times what we also notice too is that like home warranties get slapped on at the end.
Yes.
That we don't know about, you
Yeah.
know. So what our closers typically do, so you have a closer in your transaction.
Yeah.
That is now assigned to your loan. And the closer works with the title company who, in essence, what a lot of people don't what buyers ask me, what is a title company? What is it? Not only is it the place that you're going to go close at and sign your documents, but I always, again, back to the car, I always explain to people all a title company is and the fee that you're paying for title policy insurance. What that is that so somebody later on doesn't come knock. Okay, when you sell a car, you have a title.
Has all the previous
Yep,
owners or
has the previous
clear.
owners, and then they sign, and then you go to the next line, and then they sign, and you go to the next line. So it's the same thing with the title company. The reason you're getting lender's title policy and buyer's title policy, owner's title policy, what they are there for is to ensure that everything is filed properly so that later on somebody doesn't come knocking on your door and saying so and so didn't have the right to sell you this house. This is my house and I'm suing you for it. That is the importance of the title company.
And that premium is set by the state of Texas.
It is. Yes. But that is the importance. But by this time, your agent would have already known pretty much up front whether or not they can sell this house or not. Okay. Or the seller's agent.
That's why the listing agent is there too.
That's right.
Yes.
But they're also the ones who handle all the money. So they get the money and they pretty much distribute to everybody that's supposed to go get paid.
Yeah. When we as a lender fund your loan, okay, we send the money to the title company, and then the title company takes that money and disperses it amongst your insurance, your agents, your loan the seller's loan that they're paying off. Like they're a third party,
all that stuff.
They're a third party intermediary. They're there to hold the money and distribute it. And oh, by the way, they're so highly regulated on that part that they can't have one penny extra in their account. Every penny has to be accounted for. Yeah.
So sometimes that changes. So what we do is our closer, now that you're clear to close, or even sometimes when you're approved, what we do is our closers go ahead. Our closing date doesn't change, right? You know when you're closing.
Okay. Well, let's say, since you say that, whenever you decide, or the sellers and the buyers decide at the last minute or a week before, like, oh, we want to move closing up, or, oh, we want to push closing back a couple days. It's fine. No problem.
Yep.
But that's going to change things.
It's going to change your numbers.
You have to understand that your numbers are going to change based on when you're doing that, which means it's got to go back to the title company, back to the lender. They got to go back and forth. It can't be just like, oh, we're just moving it up a day. No big deal. Like, no, there's some stuff.
Now we got to rebalance.
Yes.
Yeah. And what rebalancing means is the closer is just getting with the title company and saying, hey, this is our closing date. So I need to balance title fees with
days
you.
Of interest.
We're calculating days of interest, property taxes. What is our
prorations,
right? And we get a lot of questions on, especially at this time of year, at the latter part of the year when tax bills are out, we get a lot of questions from buyers on why am I getting charged this whole big amount? And then we have to point them to the different page. So you're not going to get charged on property taxes for a property you didn't own from January to November 30th, right? Yes. But since tax bills are out, you'll get charged the full boat. Then you get a credit from the seller from January to November. And so those are things you want to look at. You want to look at your property tax prorations, make sure that those are on there because you're not going to pay for taxes on a property you didn't own. You're looking at your fees. You're looking at your home warranty, things that you opted for. Are they on there? And then you're looking for your credits. Is your earnest money that you put down, is that on there? Is your option fee? Is your appraisal? There's columns on there that kind of have this little letters, paid outside closing. And your appraisal is one of those costs. That's a paid outside closing. Now you're not going to get credit for your home inspection because that was just a separate report, that inspection that you got to protect yourself. But the biggest things you're looking for, are you getting the credits that you were supposed to get on your closing disclosure? And are the fees correct? And is your taxes and insurance set up properly?
Yes. Yes. And then you'll have a bottom line number that you're going to be bringing closing. It'll tell you here, and it'll be to the penny, like that. Again,
to the penny.
Just so you understand, the title company can't hold any extra money. So even if you, and this happens sometimes because if, let's say, things are, changing, or we went fast or whatever, and we don't have the final number until like the day before, or even the morning sometimes, because again, this is real estate, stuff happens, right? So if that happens, we will sometimes have buyers say, well, we don't have the final number balanced with the title company because we just changed the close date. So we're trying to get it updated, but it's going to be about $26,000 or less. So you can bring $26,000 to closing. And if it's only 25.5, then the title company will literally cut you a check back for $500 and you'll get your money back. So you're not ever in a position where you're going to lose money because you bring too much.
Right.
However, it's incredibly important. Well, I'll let you, because you'll do it better than me. All right, I've got my closing disclosure. I know how much money I need to bring. Where do I go get my money?
So this is another place where lenders will come in, right?
Yep. This is where this is a problem more often than many people would understand.
It is.
Yeah.
So I always tell people up front, when we are talking about your assets, if they're going to come from a retirement account or a 401k or things like that, I always tell people that's going to take probably 10 to 14 days.
Yeah.
So we need to start that process sooner rather than later.
Yes.
Okay. Not the day before closing.
Right.
Because it's going to take you a little bit to get that money
Yes.
from Fidelity or whoever
they don't want to give you the money either.
No, it's going to take them a minute.
Yeah.
So make sure we start that process sooner in the process. Now, let's say we get to closing. So at this point, I've already verified all of your information. So I have your checking, I have your savings, or wherever it is it's coming from.
Yeah.
I don't listen. I don't really care that it comes from one of those accounts, okay? Because I've already verified you have the money.
In most cases.
All I care about is that it came from you.
Yes.
So don't bring a check to closing, a cashier's check to closing from your mom's account.
Right. Or some account that you never gave us.
Or like
well, with FHA
with all, I really don't care.
Yeah.
It can come from, let's say you had another Wells Fargo account.
Oh yeah.
That had more than enough money into, and it was easier for you to cut a cashier's check from there. That's fine. As long as it's your account.
Right.
Okay. It can't come from somebody else's account.
Right.
Please.
Yes. Because it will be on the check and it will say,
and it will tell us. And then now I got to get through gift fund documentation.
Yes. In about 45 minutes because the money's already there. It's already been sent. Everybody's already signed. And you brought money from mom's account because at the last minute, she was like, you know what? This was going to be a wedding present for you. So we wanted to save it to the end. Happy marriage.
Now, the other thing that I also kind of run across a lot
happened to me, by the way,
is I tell people that like, this is to each its own.
Sure.
I am a little old school in this realm.
Okay.
Are
we that old now that we're old
I mean, I feel like I'm a little old school in this realm, but younger people, they are all about wires and all that stuff.
Yes.
I just tell people, please be very, very careful with wires.
Yes.
If you need your wire instructions, please get them directly from the title company because there are so many awful scammers out there.
Yes.
And this has actually happened where
to me.
Where a borrower got something in their email and it looked like wire instructions for their closing and they've sent money to, we have no idea where. So I am a little old school in this aspect of I like to go get an actual physical cashier's check because that is a official form of check.
Just don't put it on your dashboard and ride with the windows down. And otherwise you'd be
But like some people still send wires and there's nothing wrong with wires. I just tell people, please, if you're going to do a wire, please ensure that you are obtaining the wire instructions directly from the title company. I can give them to you, but I would feel much better if you got them directly from the title company.
Blockchain solves all that, by the way, when we get there. Then the wires are relevant. You don't have to pay all the extra fee, but
But yes, so just make sure, because at this point, now we're just kind of finalizing. This is where you're going to go for closing. This is what you need to bring. This is how much you need to bring. This is who you need to make it out to. And it either needs to be in the form of a check or cashier's check or wire. A title company is not going to take a personal check over, majority of the time it's over like $1,500. I think they're not going to take it because they don't want to be responsible for that amount of money. Okay. They need it in an official form. But if you're going to be getting funds from, let's say you do have a donor and a gift, a lot of the times we'll just tell them, have your donor write it directly out to the title company. It just makes documentation for you a whole lot easier. Less documentation for us to get. But if you're getting it from a source that's going to take a while, let's start that process
a little bit ahead of time.
Days, maybe probably a couple weeks.
Yes.
Get it started at the beginning when you get a property.
So you have your close date set and your loan's clear to close. You've got your final closing disclosure. You went to the bank and got your physical cashier's check, even though you can wire, but you like to get the physical one.
I like the physical.
And then now when your close date is, you're going to go to the title company to close in most cases. Sometimes you can do a notary that can come to you. So just because you're going out of town, although it seems everybody goes out of town
when they close
the day after or the morning, their flight leaves 30 minutes after their appointment at the title company. Yeah, that's like a thing. But gosh, I swear to you, so many people, why does everybody want to leave town as soon as they buy their house? Or the sellers, a lot of times will do it too. But so you'll go to the title company or you do have a notary come to you. You will sign, usually prior to closing or prior to going, the lender will send you some electronic documents to sign ahead of time. Everybody's a little different on this these days because of what's allowed and what's not, but you'll have like our company, the majority of the documents that you sign will be, in most cases, will be before you get to closing. You just do electronic signatures. And then when you show up to closing, you're actually going to sign your final closing disclosure, your final application, your deed of trust, the note. Those are the most important documents that you're going to sign at closing. And those require a notary with a physical, signature as it currently stands. Again, I think that'll change in the near future, but that's what it is at this particular point in time. And now your loan is closed, okay? Or I should say, you as the buyer have closed.
Yep.
All right. You have to wait for the seller to close as well.
Yep.
They can close before you or after you. It doesn't really matter. There are a couple of documents in most cases that have to be signed
from the seller.
For both of you.
Yes.
On the same document. So sometimes if the seller's out of town and you're here locally, that deed of trust, you got to kind of get 2 signatures on that one. So it can push things or delay things a little bit if that's the case.
But we would have already prepared for that.
Well, hopefully, yes.
Yes.
But if we find out, sellers the day before, like, hey, we're going out of town. It's like, okay. We get to find this stuff out. Like, the listing agent is like, oh yeah, they told me 2 weeks ago. Okay. Well, shared that with us. But so you've got everything signed. And now once the lender gets all of those documents back, okay.
We require like 5 or 6 things.
Yes. Once we get those documents back, then we review and we take a fax, by the way. They don't have to be like couriered over.
Yep.
They do get sent over to us eventually, but we're taking the fax. We're looking at those 5 documents that have been signed. And now we've already sent the money to the title company that morning, by the way. They got our wire. They just don't have the secret code to open the wire. And then once we have all the documentation, secret code is released, and now your loan is funded.
And then you can get your keys.
And hopefully we didn't kind of touch on this, but usually the day before or the morning of with your realtor, you're going to do a walkthrough just to make sure that the property, hasn't flooded. There's
no like random person
there
that you're trying to kick out.
Yes. Yeah. You want to do the walkthrough. It's very important to make sure that everything is exactly what you were buying ahead of time.
Steal all the cabinets and light fixtures.
Yes, because that has happened.
It has.
Then you're
not only we're going to do that, but we're also going to verify again that you're still working.
Yes. Oh, yes. Yes. So if you decided you were going to be slick and not tell us and quit your job the week before closing, it ain't gonna work.
Listen, everybody in the mortgage industry, we are supposed to be level 10 stalkers. Okay. That's what we're supposed to be.
That's our job.
That's our job, is to be really good stalkers. And so part of that is, okay, we have validated that you work. If you happen to quit your job and start a new one, that's not a problem, but just tell us.
Yeah.
So that we know and we can attack it ahead of time. Because what's going to happen is a couple of days before closing, we're going to call and verify you still work.
Yeah.
At where you said you work. And if they said no, he's no longer here. Now I'm he or she.
Yes.
That they're no longer there. I'm now going to have a phone call with you and say, where do you work now?
Yes.
And now we're gonna have to go back into underwriting, and update all of your stuff.
But I'm getting paid the same.
Yeah, that's great. But I have to make sure you're still employed, and I have to go verify all that information.
And the bottom line on all this is that you have to understand that, banks and realtors, and we've been doing this a long time, and we've done lots and lots of loans. Okay. So when a buyer calls me and was like, well, how about if I give my daughter a job and then she comes to work for me and then she gets a salary? It's like, no, we've gone
that's
through.
Not a problem.
Well,
I need 2 years of tax returns to
right.
show.
Yes.
There's solutions to every route. It's like one of those, what are those tables? That's like, if yes, then go here. If no, then go here. Like one of those massive ones. That's what this is.
There are solutions to every route, but the solution might be you don't get a loan.
Yeah.
Like that's still
the solution might be you're going to get a loan, but it's only going to be $50,000.
Yeah, X amount of dollars. Right, you can't buy a house for that or whatever. Yeah. I mean, there's solutions. It's just not always the way you want them to be. So that's why, again, going back to the very beginning, we have to do all this stuff up front. You got to get as much stuff done as you can up front, and you got to pick good professionals that are there to represent you, because this isn't something that you do every day.
Yeah. And like, if you just want to recap, we spent majority of our podcast today talking about everything.
Yeah, this is the longest one I've done in a long time. And I don't know why I thought this was going to go faster.
Because the most important part is everything up front. Because if we do everything up front, then literally the easiest part was the financing side of it.
Yeah. Aside from the appraisal sometimes.
Yes. I mean, the financing side is the easiest part. The hardest part is for you to go find a property now that's going to fit your needs of what you're looking for. Because everything after that, it's literally just an underwriter looks at it, tells you we need a couple conditions, then we go to closing, then we're finalizing. But everything else you've already done up front. You already know what the fees are pretty much going to look like outside of property taxes, insurance. You already know what your monthly payment's going to look at, from a rough standpoint, and we've already verified all of your documents. So that's all in the very front.
Yes. And now you have a house. Congratulations. You're a homeowner.
Exciting.
So exciting. Now you get to go have lunch with your mom and tell her how great it was. And then again, this goes back to what our job is as lenders and what agents' job is that we want you to walk away from the closing table thrilled with how everything went. All your expectations were met. Is everything always perfect? No, there's always going to be little hiccups and bumps along the way. But as long as your agent communicates with you and as long as your lender communicates with you and tells you everything that's happening so you don't get surprises at the end, then you should walk away from that transaction feeling pretty good about what you just did.
And like mini experts now, now you're like a little mini expert because you've been educated through the process.
Like, what about mini experts? Are they rolling around here?
No. Like now you became a little mini expert. You've been educated through the process. You know what to expect.
Yeah.
And you can, if somebody else talks to you about it, you're like, oh, well, this is kind of what happened, because people are going to ask you, how did it go for you? Because you hear horror stories of like people's process was not great.
Yes.
But now you can kind of say, well, this is kind of what happened. I was educated. I was communicated throughout the process. I knew what was going on. I knew what to expect. I wasn't surprised.
And then be sure to, the best way that you can thank your loan officer and your realtor is by telling the world. And what I mean by that is reviews are so important to us for many, many reasons, even bad ones, bad ones.
Do you go eat anywhere? Do you go eat anywhere where you have not looked at the reviews?
No, I always look at the reviews.
Okay. So,
well, not always. I mean, if I go to Whataburger,
okay, well, if you're a foodie, if I ever go eat somewhere that is not your normal chain, I'm always going to look at Yelp and I'm always going to look at the reviews.
The kids go to TikTok now.
Oh yeah,
they don't even know. They have like what Yelp is.
Dallas must finds.
They don't even know what Yelp is.
Yeah, but damn kids. I always go to look at the reviews. When you pull it up on Google Maps, it's the first thing. Is it a 3.5 star or is it a 4 star? Like, it's really important. Same thing for us.
Yeah. So, man, this was an hour and 40 minutes today. So, when
we talk a lot. When Mills and I get together, we talk a lot.
It's rough. So if you're hearing this, I always do these live, for anybody that's stuck around all the way to the end here. I always do these live on Thursdays, and this will publish to Spotify and Apple on Fridays. And a lot of listeners come on those platforms that listen on the podcasting platforms. And most of my podcasts are about an hour long. I try to keep them an hour. And even that's a lot, because even the ones that I listen to are 30 minutes. There's a couple I listen to that are like 3 hours. But if you stuck around through all of this, there's a ton of information in here, and there's segments of here that you can point to as a client as a realtor to your clients and say, hey, in this section, and it'll be broken out inside the podcast. It'll tell you what sections we talk about what. You can go to that section and listen to that piece and answer that question for your clients, because, and if you have questions, obviously reach out to me. I'm happy to help anytime. Jen, same thing too. Her contact information is on the website. So you can get in touch with her if you'd like. But all of this is happening right now. I want to do this primarily because I believe, not everybody agrees with me maybe, but I believe that things are going to change quite a bit in the world of real estate over the next several years. And it may not be something that happens immediately. It might be a slow burn. It might take some time, but all this is there's going to be things that start to change, and how we do our job as lenders and realtors is going to change. And your primary job as a real estate agent is to set the expectations with your clients as to what's coming, what's happening, why are you compensated the way you are, what is the process that you go through, and how much is involved in all of this, because the average consumer just doesn't understand, because again, they don't do it every day. And there's so many intricacies. That's why this took an hour and 40 minutes. And
we could keep going.
Oh God, we could have a 5-hour conversation on this, because there's so many things. We didn't even get into, well, what if this happens? And what if this happens? And what if this happens? Because there's going back to why it's important sometimes to have somebody that's gone through a lot of transactions, is you don't know this stuff unless you've done hundreds of transactions and seen all this and understands the importance of it, because there's so many
loans are the same.
No, they're not the same. And so this isn't just something that, average Joe could just walk on the street and do. And this isn't something that, if Zillow decides to come out tomorrow and represent buyers for 200, they're not going to do a good job. Like, they're not going to do a good job. So you have to understand as a consumer that having seasoned professionals on your side to walk you through one of the biggest transactions of your life is necessary, because there's so many things that can go sideways on it and that can cost you a lot of money. And as a listing agent, same thing. You know, there's so many pieces of this when it comes to negotiating which contracts to accept, and you know what what you need to disclose, and you know what's on the seller's disclosure, and covering yourself and all that kind of stuff. And if it's a farm and ranch versus residential, I mean, again, hours and
Hours
hours
and
of
hours.
information.
Yes.
So that's it. I wanted to, you know, just this was something I asked Jen to do because I wanted to go through this entire process. I don't know why in my head I'm like, yeah, we can do it in an hour.
Yeah.
No. Obviously that's not the case. So Jen, anything you want to say before we finally get off this
No, I
marathon?
appreciate it. Education is key. I feel like we're buyers at the end of the day, when you're buying a home, the unknown is what makes people so stressed out
Yes.
and so worried and apprehensive. And they're like patiently waiting by the phone, waiting to see if anybody's going to call. Um, so I just kind of feel like education and over communicating is always extremely helpful. And there's no dumb questions. This is the first time you're buying a home, or even if you've bought a home before, things have changed drastically.
Yeah.
Ask any question because
And they will continue to change.
yes.
Yes.
So ask the questions because if we can better explain it, the easier it will be and the more you understand
Yes.
the process of it so that way you're not caught off guard or you feel like it's invading privacy or things like that. We're more than happy to explain it.
Yep.
And we could even show you. I mean, a lot of it is public information too.
Yeah.
You can go we're, bound by agencies and a lot of it is you can go find it
We don't make up
as
these
well. We
rules.
don't make them up.
They're there.
I wish I could sometimes, but
hard to interpret sometimes, but certainly there.
yep.
All right. Well, we're going to wrap it up, and I appreciate anybody that stuck around all the way to the end. I will have my market update out on Tuesday where we'll do some basic market news like always, but I will go into the homes.com a little bit more. That one I will keep at 20 minutes most of the time, because I do talk a lot. And everybody have a great weekend. Try to stay dry if you're in North Texas because it's raining like crazy right now. We're hearing thunder in this place. So, and we will be back next week. Thanks, guys.
Thanks, guys.
Y'all have a good week.